Hello guys, Kenya Horton here, and in this video, I am going to walk you through an analysis of the moving averages strategy. Now, I've done a moving averages strategy video that you can go back and look on our YouTube channel. I even have a live example of a trade, but I've gotten messages from some of you and our team asking me to do a little bit of clarification on entering, on where you place your stop loss and things like that. So I'm going to show you guys an example of a trade that I got into this morning and what my analysis was. I usually trade USD JPY. That's really the only currency pair that I trade. Unless I see a really good setup of a different currency pair, then I will get into it like I did with Euro USD. So I'm going to go ahead and show you exactly what I did this morning. But I want to know, how are you guys doing? Comment on this video and let me know how your trading is going. What's going well? What challenges are you guys having? If you're on our team, let me know what's going well, okay? And let me know if you guys are using the moving averages strategy. I'll share with you a little bit just my strategy and how I started incorporating moving averages, and also how I kind of made the shift as my knowledge advanced, just so that you can kind of know what to expect as well. So I shared this with our team this morning. So let's go ahead and look at this. So this is Euro USD, all right? When I use the moving averages strategy, I always enter on the 5-minute time frame because I'm usually scalping just for quick pips. And I back tested my moving averages strategy a while back for a while because I journaled and demoed for I don't know how long, for a while though. And I really like the moving averages. I like the moving averages to add for a stronger confirmation when I'm using a different strategy. So many of you know I used the Sharif and Davin's 4 rule strategy for a long time. And I incorporated moving averages, which really helped me with trend trading and just really being able to get into the market for quick pips. And it just added really stronger confirmation to my trades and made my entry criteria a lot stronger. So my moving averages on here, you'll find them in the description in my previous moving averages video, okay? The blue moving average is a 200 simple moving average, and that really helps me to identify the overall trend, which I like to identify on the higher time frame. But since I'm just in and out of the market, I at least know what the direction is at that time. Then you have the purple moving average, which is your 50 moving average, and then your 50 simple moving average. And then you have an 8 exponential moving average, which is this yellow line here. So what I want you guys to see, someone messaged me and asked me, Kenya, I still don't understand what do you mean by the gap? You want a nice gap in between your moving averages. So when I say gap, I'm talking about this space right here in the middle. And I'm going to show you an example, another example as well too. But you want a nice space in between your moving averages when they do come together. So I want you to notice the progression here, okay? Look at the progression as price goes long and your 2 moving averages cross over. I also use the RSI, and I have my levels on 80 and 20. So when your RSI and money flow is pointing in the same direction and it's above the 50 level, the strength is with the buyers. When both of them are below the 50 level, the strength is with the sellers. So look at the direction of price right now and look where your money flow and your RSI is. It's above 80 and pointing up. So that's a strong signal. That's a strong confirmation. But what you're going to have normally is some pullback as well, okay? So what I did was I said, oh, shoot, moving averages are about to cross. Now, there's no app to tell you when the moving averages are going to cross. Many of you have sent me questions asking that. There's not an app that I'm aware of that would alert you when the moving averages cross. And I wouldn't want that because the big players would know that too. So you don't want everyone doing the same thing. I mean, you want to analyze for yourself. So anyway, moving averages is not guaranteed, all right? It's just an indicator of what might happen. So here you have a nice buy occurring, right? So your moving averages is a reflection of a change in the trend. So let's look at the next one. Now, when the moving averages cross, I don't get right in just because the moving averages cross. What I do instead is I always look left for clues. I always look left to see where I look at key numbers in the market. So I look at my support and resistance levels and I see maybe where price tested a few times against the resistance or so. And if you're an IML Academy, this is all basic knowledge in IML Academy, okay? But on this strategy, so my entry, you always want to enter on the pullback. So after the moving averages cross, if you're going for a buy, the yellow candle, the yellow candle, the yellow signal line, the yellow moving average, sorry, crosses your purple moving average. And when it crosses, if you're going for a buy, you want to wait for a pullback, and then you want to wait for a second or third confirmation candle. So I entered on this candle forming right here, this blue candle that you see, or green candle, whatever you want to call it. And then my stop loss, I usually drop my stop loss about 5 to 8 pips below the purple moving average or previous support, okay? That usually is sufficient for me. I like the moving averages strategy because it's a very tight stop loss. You're only risking very little pips in case the market reverses and goes the opposite way. So no biggie, we just get stopped out. But if you backtest a moving averages strategy, all of them are really good, honestly. But if you backtest your moving averages strategy, you can look at times in the market where, for example, if you trade the London session, you can see how that currency pair performed during the London session. What are the average amount of pips that are, what are the average amount of pips during that session when the moving averages cross? Or you can look at that currency and really pay attention to what it does and just have an idea of about how many pips you can get. So that's how I became confident in knowing that I could get about maybe 10 to 20 pips with the pair that I was trading. You want to trade low currency pairs when you're doing the moving averages strategy. So I'd say Euro, USD, USD, JPY, GBP, USD, all the low currency pairs, okay? So that's where I drop my stop loss. And I normally would aim for about 5 to 10 pips. But let me tell you this, one of the things that I do, I enter on pullbacks. I trade pullbacks a lot, okay? I love trading pullbacks. So I will take like 3 to 5 pips quick at a time, all right? I usually do 2 to 3 positions, utilize proper risk management. So for example, what does that mean? You want to control your risk. You want to know before getting into a trade, what am I risking? Big players, the big players in the market, they don't care about their wins. They care about controlling their losses, and you need to think the same. You need to protect your capital. So if you have a $500 account, you want to risk maybe 1 to 2% of your account, okay? Risk 1 to 2% of your account. If you're going to twin trade or enter 2 or 3 trades, and let's say you're doing a dollar lot size, for example. So if you're going to do a dollar lot size, you could do 2 positions at 50 cents a pip. I'm going to do another video on risk management, and I'm going to show you guys a risk management calculator that you can use that will really help you. But let's just go through this, and I want to show you a few more things. So you would get in right here on the pullback, and then look what happened, okay? So you had your, see you have a strong buy candle here. So what I normally do is I would take my 3 to 5 pips on one trade, close it out with 3 to 5 pips because I know the market is going to pull back, okay? We don't know what it's going to do, but we look left for clues to get an idea. So I take my 3 to 5 pips, and one of my positions, I just leave it open. And once it gets about 8 pips in profit, I move my stop loss past my entry price. So let's say if your entry price was 1.1448, we're in a buy, right? So once you're about 8 pips in profit, let's say price is up here, you're going to adjust your stop loss, and you're going to move your stop loss to 1.1449. Got that? 1 pip past your entry price. Again, your stop loss would be adjusted to 1.1449. All right, 1 pip past your entry. That's how I create risk-free trades. That's one of the ways that I control my risk and minimize losses. So now, look how the market pulled back, okay? And then it has a resistance area here that is testing a few times, all right? Got a few wicks, got some rejection, price started to shift, okay? So what I did, you have to be cautious during this time, but don't freak out, you know, but wicks tell a story. Wicks tell a story. Wicks are, they tell a story, okay? Wicks are an indication that there's going to potentially be a price reversal. So you want to pay attention to that, right? But it's okay because we have our stop loss in place, so we're not worried at all. A lot of times you just have to be patient. You can't freak out on a pullback. You have to be patient, and that's why you control your risk. As long as you control your risk, then you should be okay. So I continued to stay in this trade. Now in between here, I was grabbing about 3 to 5 pips at a time, okay? But I still had my one position that was open. I actually did a few positions, but left one position open. So let's keep going and look what price did. There was no high impact news this morning, no medium impact news for Euro or USD. So the market can do whatever it wants to do. I know sometimes you might get in a trade and you might think, oh my gosh, the market just went against me and I don't know what happened. Nothing is guaranteed in the market. We can't control how much we win, but we can control how much we lose, right? So this is one of the beautiful things I love about trading. You know, as your knowledge advances, you're going to be able to do more. So let me just show you, for example. So we're in a buy, right? I've taken a few pips already. Now look what happened here, guys, okay? So when you see a shift in momentum of price, like I said, always look left for clues. When you look left, look to see where the market last retested this area. Go on a higher time frame on your 1 hour or 4 hour time frame and look at areas where price retested previous areas similar in the past. So that'll give you an idea of where price possibly will go today, okay? So when you're in the trade. So that's what I did. Most people will get excited and say, oh my word, you know, there's been a shift in momentum and I'm going to get in on the sale right now. You don't want to do that. You don't want to get in on the sale and you don't want to think like everyone else. You need to think opposite of what everyone else is thinking. So instead, this is something you want to keep in mind. Every time you see a shift in momentum, the market has to correct itself. Think of a bow and arrow. I mean, when you look at price, for example, let's say it's shooting up, right? Well, eventually it's going to exhaust. It's going to exhaust, right? The buyers are going to lose momentum and the sellers are going to come in and push price back down. We just don't know when, but we look to the left and we look at previous data points, previous relevant market data to help us understand where price potentially could go. So I'm already done. I'm out of the market at this point. I got my pips. I closed out on my last trade that was trailing. And now I look for the opportunity to sell. Now, here's the beauty of this. I know from trade and market structure now that after a shift in momentum, the market has to correct itself. I can pull out my Fibonacci. I have my support and resistance zones, and I can look for a correction in the market and get in on the sale. And that's exactly what I did. So here we go. Now, how did I know that? I look left. Like I told you, there's a few things I can't pull up here on my screen that we would look at way in the past. But one of the signs that I had got was a triple wick rejection. When I saw a triple wick rejection right here, I knew that the market was about to reverse. This told me that this is exhausted. Buyers are losing momentum and sellers are now coming in with the power and pushing price back down, okay? So I entered on this second sale candle forming here, entered for a sale. And these are some of the results that I got this morning. I had a few more trades as well too. And then, as you can see, price came down. And then with market structure, you're always going to have, let's say when you have a shift in momentum, you're then going to have a correction. The market will potentially correct itself maybe about 50% usually, most times, okay? Not all the time, but, and then you're going to have a retracement. And so I just want to show you guys the moving averages strategy in just an analysis of the process that you go through in using this strategy, and that you know what to look for, that you know how to control your risk, that you know where to place your stop loss. Now here this is where you do not want to enter the trade. Now some of you have said, what do you mean by the gap? So see how there's no clear gap here? There's like no space between the two moving averages. This looks like a ranging area. So you don't want to enter in a ranging area because you don't really know which direction price is going in. Unless you have experience trading ranges, then I recommend staying out of the market when you see this. Instead, you want to see this, a nice gap between the two moving averages. And look at when they come together, you have a nice gap, okay? That is more of a confirmation to know that you'll have a really good trade that goes long or that goes short, vice versa, okay? So I just wanted to keep this brief and show you that analysis. If you guys have any questions, be sure to drop them on this video. I'm always happy to answer your questions. Otherwise, guys, I will see you in the next training. God bless you. Keep up the good trading, and I'll see you in the next one.